We've had all kinds of fintech names on the show from around the world, actually just in the last few weeks. And the sense I get is there's kind of a bifurcation of how companies are moving in Europe and how they're moving in the United States, particularly those that might have been venture-backed, grown rapidly, but now they're trying to scale around the world. Would you say that's a fair thesis?
I think that's right. Certainly we're seeing in the US that activity is picking up in the fintech space. Valuations are starting to recover, especially in the B2C segment. And there's more optimism around the IPO markets reopening. But in Europe, things continue to be slower from a growth equity perspective. We're starting to see a bit more M&A activity in Europe. So that's one path to liquidity for growth equity investors that helps to support that market. But overall, it is a more muted environment in Europe right now.
What are the reasons why? I've covered all kinds of industries and sectors over the last 6 years or so that I've been in Silicon Valley, in the Bay Area in particular, where growth equity has been very active, and you actually get sort of legacy finance names that come in and support what we would regard as being technology companies, particularly just prior to IPO. Why is that activity and interest not happening in Europe?
Well, I think there's a few dynamics. As you know, European markets have always been a little more fickle in their appetite for growth opportunities within the IPO markets. But I think there's a dynamic specific to fintech where there's a much higher prevalence of fintechs with bank charters in Europe than you see in the US. And that does tie their hands a little bit in terms of the options available for them to raise capital in this market environment where valuations have been a bit whipsawed.
Devon, one of the most read stories on Bloomberg this morning is about a research note from Citi, who say that artificial intelligence will displace the most jobs, or in terms of displacement, be most felt in banking versus other sectors. Is that something that you see happening?
Yeah, we absolutely see a huge opportunity for AI within financial services. The volume of activity that is happening in that space, the more repeat nature of many interactions and forms of analysis allow for really nice use cases for machine learning as well as generative AI. What we are seeing, though, is that within the sector, we expect data sets will really drive the winners for how AI gets applied, and AI itself, the strength of your AI capabilities is going to be less of a differentiator.
I like having you on because you are a sizable firm at scale and you operate in multiple jurisdictions. So where are you putting money to work and writing checks right now?
So to your point around AI, RegTech is an area that we're really excited about. We see lots of opportunities for technology disruption there. We're also spending, increasing time around consumer finance. That's an area that's been hit hard over the last few years, but we think we're at a point now where there's some stronger business models that we're excited to back. We're also continuing to spend time around vertical SaaS and the opportunities for embedded financial services, particularly payments, in many more traditional software businesses. So, those are some of the themes that we're playing with. But from a geographic perspective, as you mentioned, we're active across North America and Europe.
I like the idea of RegTech, RegTech or regulatory tech. But my understanding is that those are largely software companies that are focused on process, right? Helping companies make sure they're either compliant or they're adhering to whatever sector-specific regulatory requirement is in front of them. How do you be innovative in a space like that?
Well, I think the innovation comes from, how you drive efficiencies, right? Everyone across North America and Europe in the traditional financial services world is looking for how they can take out cost and really grow their businesses with fewer regulatory inhibitants. But I would also say, regulatory change is one of the toughest strategic challenges for financial services businesses. to manage. And so tools that allow them to do that more efficiently are ultimately tools that enable them to be more innovative in various elements of their business. And so we see reg tech and managing regulatory environments effectively as really an important enabler for innovation for the sector.
Devon, you join us from Toronto. You've cast your eye over Europe. We've talked about the United States. Which jurisdiction do you think is the best environment from a regulatory standpoint right now that allows for innovation, that allows for a market where sort of technology progress is rewarded?
We can continue to see the U.S. as a leader in enabling innovation. There's pockets, if you think about account-to-account transactions, open banking, where European regulators have really led the way. But overall, we see the U.S. environment as being, a really attractive one. There's pockets right now, if you think about banking as a service, for example, where there's a lot of regulatory dynamics for companies to digest. But overall, we see it as a constructive environment, and most importantly, a large environment where there's the market opportunity to support investing in innovation.